Qualcomm is one of the more interesting stocks that's benefiting from the rising effectiveness of artificial intelligence. In this video, I'll review the company's latest prospects, its latest quarterly results. I'll look back longer term on its revenue and profitability metrics. I'll consider its balance sheet. How much debt does it have compared to how much cash on the balance sheet? Finally, I'll look at its valuation to determine if it all makes sense for long-term investors to buy this stock or if it's a hold or a sell. So let's get started with the latest quarterly earnings results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the key things that Qualcomm has been improving is its automotive segment. And so far, it now has a design win pipeline at approximately $45 billion. So this market, and I'll share with you how it performed in the latest quarter in this segment, and it's shaping to be a growth opportunity longer term. Now, management also said that we are pleased to report strong quarterly results with earnings per share that exceeded the high end of our guidance. Typically, management tells investors, look, we think our profits are going to be anywhere from here to here, right? This is the worst case. This is the best case scenario for where we think our profits will end up this year or this quarter. And with Qualcomm in the latest quarter, profits ended up like way over here, exceeding even the high end of the best case scenario. Furthermore, they have some upcoming launches with their Snapdragon X platform and enabling leading on-device AI capabilities across multiple product categories. The Snapdragon X platform is gaining share in personal computers. That could be a nice little boost for Qualcomm, or I shouldn't say little, it could be a big boost for Qualcomm. And let me share with you how each segment performed. Now, out of its three segments, handsets, automotive, and Internet of Things, handsets are by far its largest market, and in the latest quarter, it grew by 1% year over year. Now, the handset market is mature. It's not growing by all that much, and so for Qualcomm to improve in that market, it has to gain market share. Automotive, meanwhile, is a growth market. Each car is getting embedded with more and more technology each and every year for the last 10, 15, even longer, and so Qualcomm is benefiting from that growth in the latest quarter, 35% improvement. It's still a small part of its business for now, but given that large backlog and the rapid rate of growth, it wouldn't be surprising if automotive quickly grows to become a meaningful part of Qualcomm's business. So the latest quarterly results were excellent. Now looking back longer term, Qualcomm has done a solid job in boosting its trailing 12-month revenue, $36.41 billion in the most recent trailing 12-month period, up from roughly $26 billion in 2015. Similarly, with its operating income, it increased all the way up to $8.21 billion, up from around $7 billion in 2015. Volatility, to be sure, the company benefited significantly during the pandemic when people were spending more time at home, spending more time on things and things that come with technology even more, and that benefited Qualcomm significantly. As economies reopened, people spent more time away from home, more time on services, and that was a headwind for Qualcomm coming out of the pandemic. So a big up and down here in the recent 4 years for Qualcomm, but the growth drivers, and now with the rising effectiveness of AI and the rising compute requirements to implement artificial intelligence, right? Your devices need to come with greater computing power in order to facilitate the use of these AI technologies. And so that's going to benefit a company like Qualcomm significantly. Looking ahead, the analysts on Wall Street that are following Qualcomm stock, they think it's going to grow its earnings per share by 11.29% each year for the next 5 years. Now, that would be a big slowdown from the previous 5 years because remember, that included the boom during the pandemic where it increased its earnings per share by 28% in the previous 5 years. And like I said, I wanted to look at the balance sheet, how much long-term debt and cash and short-term investment And the balance sheet is solid. It has 15.46 billion in long-term debt, but it also has 13.85 billion in cash and short-term investments. So if it wanted to, it could pay off all of its debt, and it would only have roughly $1.6 billion in long-term debt left over if it used all its cash to pay its long-term debt. I don't think it would do that. I don't think that would be a smart thing to do. But just in case, if they wanted to really reduce that long-term debt so that they could reduce the interest expense, they could. And I already shared with you that the company generated strong profitability, 8.21 billion in trailing 12-month operating income in the previous year, and the year ahead looks better, and they're expecting double-digit growth in earnings per share. They have more than enough cash flow, more than enough profit to pay down that debt if they should choose to do so. Now, I last updated my Qualcomm recommendation on May 27th, where I reiterated that I thought the stock was a buy, and it's been on my list as a buy for some time now with recent updates on May 27th. So is it still a buy? Well, the stock is trading at a forward price to earnings of 20, near the highest it's been according to this valuation metric going back 4 years. But I think it deserves this premium because of the pipeline of new products coming out, the phenomenal growth in the automotive segment, and it's gaining market share in key categories related to artificial intelligence. And we all know the phenomenal growth in the AI market, and Qualcomm's position to benefit in that market gives investors a nice long-term trajectory here. So I would reiterate that I still think Qualcomm stock is a buy, and I'll update this recommendation on June 18th. And for your information, this list of stock recommendations is for my personal use. This is what I use, and I only make it available through these videos. So if you want access to this list, you just have to watch the videos, because I don't make it available anywhere else for now. For now, this is the only way to get access. And the ratings go all the way from my top stock to sell all the way up to my top stock to buy. And there's categories in between, such as sell, borderline sell, hold, borderline buy, buy, and top stocks to buy, and then the best stock to buy, which, by the way, for 2024, my top stock to buy has been Alphabet. And also, by the way, Nvidia has been on my list of top stocks to buy all year long. That was one of my best recommendations for 2024. So I update this list frequently, and I share this list usually in every single video I make. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.